Now let's talk about the Federal Employer Identification Number, or EIN. Now, if you're putting together an LLC where you're the only owner, so it's a single member LLC, you're not required to get an EIN unless you plan to have employees. But here's the thing. If you have a single member LLC and you're using your social security number because you didn't want to get an EIN, or employer identification number, then anybody you work with or who hires you is going to need to 1099 you in many cases, right? Because if you're providing a service and they're paying you over $600 in any particular year, then they're going to need to issue you a 1099. If you don't have an EIN, they're going to be forced to issue that 1099 to your social security number, which you're going to need to provide on Form W-9 that you give to the client that you're working with, okay? So if you don't want to expose your social security number to all of your clients, then it's a good idea to get an EIN, or employer identification number, for your single member LLC, so that when you fill out the W-9, you could put the EIN of the LLC on there as opposed to your social security number. All right? So even though you're not required to get an EIN, many times it's a good idea to have one. And if you have a business bank account, they're going to ask for that in many cases. And you could still use your social, but a lot of things are a lot smoother if you just get the EIN. And it's free at the end of the day. Now, if you're going to hire employees, then you definitely need an EIN. There's really no way around that, because as soon as you need to do payroll, there's going to be your EIN associated with that, and the IRS keeps track of all this stuff using that number. So definitely, if you're going to have employees, make sure you get that EIN in place as soon as possible to make sure that everything runs smoothly when you do have to run payroll. All right? So let's take a look at how to apply for an EIN. Now, one way to do it is via Form SS4 that you can file with the IRS. Let's take a look at that. All right. And as you can see here, it's quite the form. And there's a lot of fields here, but honestly, it's not very complicated. Okay, it asks you for the legal name of the entity, mailing address, and so forth, the type of entity that's requesting the EIN. So as you go through here, if you follow the instructions, it should be pretty straightforward. This is not a devastatingly complex document by any means. So as an alternative to filing Form SS4, you can actually request an EIN online using the link that I'll throw in the description for you. And after you go to this website, you can simply click Apply Now. And of course, it's unavailable due to system maintenance, so I can't show it to you right now, but it's pretty straightforward. It's essentially an online version of the Form SS4 that I showed you. And once you get through the process, you will have the EIN available right there. Now, you do want to save that page, print it to PDF, do whatever you need to do, because that's going to be your EIN. Aside from that, they're also going to mail you your EIN, all right? And they're not going to mail it again for you. So once you get that paper mailed EIN, definitely make backups of it, store it in a safe place, do what you have to do, because they will not send you another EIN document, okay? You only get one. All right, so the filing fee is none for EINs. They're freely given out, so definitely don't hesitate to get one when the IRS website is actually working. It's a pretty straightforward process and usually takes about 2 to 3 minutes to get an EIN, so really not a big deal. And it says here, additional employer identification numbers may be required at the state and local levels if you plan to have employees. So California needs to have another form of EIN as well, so that's something you need to take into account. And once you set up a payroll service, they may take care of some of these steps for you, but you just want to make sure that it is done correctly, because at the end of the day, you're responsible for the accuracy of your payroll and any penalties that may arise from that. That's the EIN. In some cases, it's not required, but still, it may be, depending on your facts and circumstances, a good idea to have one, just so you don't have to throw your social security number out there more than you need to. Moving along, let's look at item E, and this is the business license and or business tax at the state and local levels. Now this is variable depending on where you are, what kind of business you have, and so forth. Some places do have a business tax, some don't. Some places make you register for business licenses, some don't. And you may need to register for licenses for certain businesses, whereas you don't have to register for others. Now in LA City, where I currently reside, there is a LA City business tax, okay? And you find out more information about that by visiting this link. And there are some FAQs on here and things of that nature. But at the end of the day, you have to register for a business tax registration certificate. All right. So if you're doing business in the city of LA, they want to have you on their radar. And this is how they do it. They make you register for their certificate. And there is an annual tax that applies based on gross receipts, depending on what kind of business you have. Now, I have a lot of clients who try to avoid this tax by hiding under the radar, and that's never a good idea because they will find you. And the way they do that is they collect Schedule Cs from the IRS, and if a Schedule C has an LA-based address, they look and see if that's based in LA City, and if it is, they cross-reference that with their database of businesses, and if you don't have your business registered where you should, that's going to come up and you're going to receive a notice with penalties. Now, one of the benefits of registering for the LA City business tax is that there's a $100,000 exemption that's generally applicable. So if the gross receipts for your business are less than $100,000, then you pay no tax at all. You just have to file the annual registration and you're all set. Now, that's the way they get you on their radar. So if you're below 100,000, you're filing the annual renewals. They know that you're out there and that you're doing business. So when your business grows above 100,000, then you're going to need to start paying the tax, and they know you're out there. Okay, so not a good idea to try to circumvent the business tax. They will find you. And at the end of the day, it's not a tremendous amount, and it's important to make sure that you take care of it because otherwise there could be penalties and interest that are assessed. So that's the LA City business tax. There may be other taxes and licenses in your particular area that would be applicable. You know, a Google search would definitely help in this regard, but on top of that, working with a qualified attorney and or tax professional is definitely going to steer you in the right direction to make sure that you take care of all those applicable state and local business license and business tax requirements. So it says here that ensure that you meet all of the applicable filing requirements, rules, and regulations in your respective state and county, and that all applicable taxes are paid in a timely manner. Now, whereas the federal government can print money, the states and the municipalities, they cannot. So they really need to have their tax dollars paid in a timely manner, and they're especially vicious about tax collection. So I definitely don't want to leave the states and municipalities hanging. Make sure you take care of your tax liabilities there, and you should be all set. Now let's talk about item F, and that's income tax projections or estimated payments. If you expect net income from your LLC, which means you're self-employed, you have a single member LLC, and you expect positive net income, you may need to make estimated payments throughout the year. Because let's say you don't have another job that you're working in, you're just a single member LLC, and that's your primary gig. In that case, if you have, let's say, $100,000 in net income, no one's withholding taxes on those amounts. You're just going to get $100,000 coming in. And given that, there's going to be a certain amount of tax that's due for the year. Now, typically, you'd want to pay that tax throughout the year using estimated payments to avoid the assessment of penalties and interest. So if you're not paying those amounts throughout the year, you can take care of it when it comes time to file your tax returns, but there's going to be penalties and interest added along to it because the way the tax system works, they want you to pay your estimated payments as you earn the income, all right? So the way to approach this is to estimate what your total tax liability might be for a particular year and then divide that up into estimated payments to be paid by the tax payment deadlines. And the first deadline for federal purposes is April 15th, then you have June 15th, then you have September 15th, and then you have January 15th of the next year. California, of course, has to be different. So their estimated payments work on a different schedule in that the first payment is not 25%, but it's 30%. Okay. Second payment is 40%. Third payment is 0%. And the fourth payment is 30%. Okay, so try and figure out how they come up with that. But it's 30%, 40%, 0, and 30%. And that's the payment schedule that you'd really want to adhere to for California purposes. Because if you do 25% on each payment, you may be subject to penalties because it wasn't 30% and 40% on those particular payment dates. California has to be different. That's the way it's set up. But essentially, if you have an LLC that you're working with, there's a good chance that if you have positive net income, you're going to be subject to some estimated payment requirements. Now, when it comes to estimated income tax payments, there's generally two schools of thought. Now, I have some clients that say, look, Alex, I have some bad months, some good months, and I don't know what my cash flow is going to be at any particular time. So I'd rather have the cash on me as opposed to paying it in for taxes. Now, those clients end up paying the taxes, penalties, and interest when they file their income tax returns. Now, on the other hand, I have another school of clients that says, look, I don't want to pay a single dollar in penalties or interest. So tell me exactly what the estimated payments are going to be, and I'm going to make them in a timely manner to avoid penalties and interest. And those clients end up paying those payments in a timely manner throughout the year and generally aren't subject to any penalties. So there's two ways to approach it, and even if you're in the first school of thought where you don't want to make any estimated payments throughout the year, it's still important to understand what the total amount is going to be due when it comes time to file your returns, because you want to make sure that you at least set those funds aside so that they're available when it comes time to pay the taxes. So with estimated income tax payments, you're going to end up paying it one way or the other. It's just a matter of if you're paying them throughout the year as required, or if you're being subject to the penalties and interest and paying it when it comes time to file your returns. Now, another important consideration is sales tax, and this is the next item on my list here. Now, sales taxes are a topic in and of themselves, okay? And they vary by city, by municipality, by state, what have you. And that being the case, you should really consult with a qualified sales tax professional to make sure that you're abiding by all of the applicable regulations. Now, recently there have been some court cases that really changed the playing field in this area. So this is a topic that in and of itself could be a series of videos, so I'm not going to get very in-depth with it in this one. But I will say this, with income taxes, if there's any applicable penalties or interest, it's generally calculated on the net income, right? So you have your income minus your expenses, and whatever's left over would be subject to income taxes, which could generate penalties and interest. So if you, let's say, had 100,000 in income and then you had 95,000 in expenses, then you have 5,000 in net income that will be subject to taxes, penalties, or interest. On the other hand, with sales tax, it's generally based on the sale price, right? So it's based on the revenue. Now, if you had that 100,000, for sales tax purposes, it would be based on that 100,000, not on the 5,000 net. So when you have issues with sales tax, the numbers in terms of the taxes, penalties, and interest tend to be a lot higher than with income tax, because the income tax is looking at that net income, sales tax is looking at the overall sales amount. So it's very important to make sure that you stay on top of your sales tax requirements, because it can get very ugly very quickly if you are not keeping track and making sure that you're meeting all of those requirements. So if you're selling to individuals in different states, if you're providing services, if you're selling products, you want to make sure that you're in compliance with all those rules, because if it comes to light that you weren't collecting sales tax from your customers, you may find yourself in a difficult position of having to pay those taxes without having collected them from your customers, and that's a situation you definitely want to avoid. So that brings us to the last category on my list, and that's the anything else category. Depending on where you operate your business, what kind of business you have, if you have to deal with hazardous chemicals, if you have to deal with DOT regulations, I mean, there is such a plethora of other items that may be applicable, whether they're licenses, registrations, permits, what have you. Do your research or have a qualified professional help you in this regard, because I'm sure if you're, let's say, Elon Musk, he's got SpaceX. I mean, they're building rockets and sending them into space. I'm pretty sure there's at least a permit that's required for this type of thing. If you start doing that in your backyard without a permit, you'll probably be in trouble. Now, he also has the boring company, right, which is digging tunnels under the surface of the earth. That might necessitate a few permits here and there as well. Now, similarly, he has a car company, and I can only imagine the amount of regulations you have to deal with on that front. So depending on what kind of business you have, the nature of it, whether you're selling services or physical products or even intangible assets, there's probably some kind of other permit or regulation that's applicable that you have to be mindful of. And this is where a qualified attorney, a qualified tax professional, and just a good team of professionals overall can guide you in the right direction. So that was an overview of some of the requirements and taxes applicable to LLCs in California. Now, hopefully this helps shed some light on why California is viewed as being unfriendly towards businesses, because as you can see, there's plenty of taxes and red tape to wade through to actually conduct business. So if you enjoyed this video, feel free to leave a comment, like the video, subscribe to the channel, and be sure to hit that bell icon to be notified of future videos as soon as they're released. With that said, hopefully this was helpful. Thanks for watching.